let's get started. So today I'm going to talk to you guys kind of a part 2 of my last week's webinar around the month-end close process and how we can streamline some of those. I'm going to kind of go over that again, just more high level. I have lots of questions about it from clients reaching out. So I want to make sure we feel comfortable and understand the process itself. And then today's focus is going to talk about streamlining the process. So a lot of times people are using Excel to track different pieces of their financials, different pieces of their business. And I want to show you guys some examples and how we can move that out of Excel and into QuickBooks and kind of look at the reporting that we could use to replace those Excel reports. Okay? We're going to look at talk about the process again. We're going to look at Excel tracking versus QuickBooks, and we're going to customize reporting. So let me jump over to my sample file as always. Let me just kind of get things up on my screen. Okay. So kind of what I told you guys last week is let's talk about what is the month-end close process itself. So this process is what we like to tell our clients we should be doing every month. Now, some clients, just based on the nature of their business, the nature of the number of people that they have, they will just do a quarterly close. What we want to get away from is waiting till year end to close out the books. So a monthly close process is a structure of accounting procedures that all businesses should be performing at the end of each month. The purpose is to ensure our financial records are accurate and up to date. This is, again, that key part of financial reporting when it comes to being able to make those business decisions. Okay, so purpose of it is to make sure we have everything in the file. So all of our customer invoices, customer payments, the vendor bills, vendor payments, our month-end close allocations. So those journal entries that we do for prepayments, if we're doing deferred revenue, all of those things are in the file itself. We want to make sure that we're reconciling all of our balances. This is going to allow us to review discrepancies. And then at that point, once we've gone through all those, we're going to be able to prepare our internal reports for our leadership teams, for our external stakeholders to make the decisions of where does the business go. Okay, so kind of some key benefits. We'll be able to make business decisions faster by knowing that our month-end numbers are accurate. So this is going to help when it comes to cash flow management. What is it that we can, if we're looking at a shortfall, can we maybe talk about payment plans that might be needed for any loans? Or, hey, if we're doing good, maybe this is some time to invest, build the business, go in a different direction, start a new division. Okay? So, as I told you guys, I always use the balance sheet as my starting point because my goal is I want to have some documentation that supports every one of these balances. Let me move this guy to month end. So when we think of our statement accounts, we're going to use our statement and we're going to go through that reconciliation process where we're reviewing the statement and we're verifying that every transaction is in our file. We're making sure our ending balances match. When it comes to our accounts receivable, we're going to run our detailed report. We're identifying, is there any cleanup? Is there any customer invoices that we know we're not going to collect on? Why wait till year end to write those off instead of writing them off, as you know, in that current period? Okay, our current assets. So as I showed you guys last webinar, we at Fourlane teach our clients to reconcile all balance sheet accounts. Our goal is to remove the noise. So remove our debits and credits that offset each other. Okay. So for example, when it comes to employee advances, the goal and hope would be that when we provide an employee advance, that employee is paying it back every pay period or minimum every month. We would want to see movement every month. Okay, by reconciling that account, we can see if that's happening. So I'm going to show you guys an example out of employee advance where if I was not reconciling this account, I wouldn't have been able to pick this up. So I'm going to change it and I'm going to sort it by employee. And what this does is this allows me to see per employee, what have we given out in employee advances and what have we received back when it comes to the payment back. So you can see here we've got Dan Miller. At the time, we have given him an employee advance of $750. We've got Elizabeth here. She's paid back $370. But where did we give her an employee advance? Did we miss that somewhere? Okay, so this is allowing us to have that bird's eye view every single month to make sure our numbers are accurate. We're not waiting until year end and said, oh my gosh, we messed up on Elizabeth here and she overpaid her repayment. Okay, we don't want to wait to figure out stuff months later. We want to look at it every month to make sure our balances are accurate. Okay, coming down here on the liability side, same concept. On the AP side, we're looking at, did we miss a bill? Do we have a credit from a vendor that we're no longer doing business with that we want to request money back? We want to make sure that we're able to see what do we have coming up that's going to be due. Same on the AR side. What are we expecting in cash so that we can make decisions as a business? Okay. Credit cards, we want to make sure all transactions or payments are in the file so that shows us what we owe and our credit cards. And then this takes us down to the same piece of those non-posting balance sheet accounts that we can reconcile. So on the customer deposit, we want to see we've taken in customer deposits. What have we fulfilled and what do we still need to fulfill when it comes to our customers? We want to know that. We want to make sure we didn't miss a project. Okay, deferred revenue. So here, deferred revenue is when we take payment up front for services we are going to do later at a later month. So I always use the examples explain it. You have a subscription business and you're taking, you invoice for 12 months up front and your customer pays for the 12 months. Well, you want to allocate the income per month. So even though they're paying up front, we don't want to have the income show in the month that they paid. We want it allocated over the 12 months. Okay. Of course, we've got our payroll, and then our loans. I always say take the statement. Even though you don't reconcile it like you do a statement account, what you want to verify is that the balance on that statement for that loan matches what your balance says on your balance sheet. You want to know as a business how much you owe. Sometimes I see that when clients are applying their loan payments, they forget to separate. So they apply the whole amount that they pay towards principal. And by looking at that statement versus the balance, we're going to be able to identify that. We need to separate and you need to expense that interest that you're paying on that loan. Okay, so that's kind of just high level review of what I talked about last week and its importance of, what we want to accomplish each month. So now I want to talk about those adjusting entries that you make at the end of the month and that we're using Excel to get there. So I've got a couple examples to show you guys. So I did one for employee advances to kind of show you guys. I went back and used our same people. So we've got Trisha Thomas here, Dan Miller, and Elizabeth. And you think about it, this is what we used to have to do. We'd build every year a new Excel spreadsheet to be able to track the activity and movement of an account. So we can see as of year end 2024, this is what carried over the balance. And then the month would show the activity so that we can see at any point in time what the balance is. Okay. Another example that I made was for customer deposits. So again, you've got your customers listed here. You've got the amount that we invoiced and then the amount that we took in for deposit and how much the customer owes. So manually having to keep this updated every time we do a transaction on a customer's account if we involve taking upfront deposits. Okay. The last one I'm going to show you is deferred revenue. So again, taking your customer and you're billing them an upfront contract amount that you're expecting them to pay. You have a contract term, and then when did the contract start? Now, and this is where these monthly journal entries come into place, because we would have to every month do a journal entry to allocate this amount per this customer. It's very manual, and then update our spreadsheet every time we get a new client that we have a contract with. This is what we used to have to do in Excel. And what I want to show you guys is how we can bring that into QuickBooks and remove the Excel factor and still have the same spreadsheet layout and able to report and see the details that make up that balance. Okay, so coming back in here into my sample file, you can see I've got a customer deposit liability account. I've got a deferred revenue liability account. And then coming up here, I've got my employee advance account. So those are the three examples that I showed you and the three that we're going to look at for our example today. Okay, now I want to come over here. There's a couple of ways to get to this, and I'm going to do the simplest just to show you the in and out activity. But my final step is I'm going to show you how you would customize these reports to use these as your backup to support your balance sheet amount. Okay, so coming on down, I'm going to start at my employee advances. All I'm doing is running a quick report. A quick report allows you to see all the activity, so the ins and outs of this account. Okay, and so what I'm looking at here, I'm going to sort it by name so we can see everybody. So we've got our Dan Miller, we've got Elizabeth, and then we've got our Trisha Thomas here. And again, what this is showing us, if you're like me, you like old school, I like to see my debits and credits separated. Just makes it easier for my brain to see it. So I can see we've got Dan here where he got an advance of $450. He then paid it back the next month, and there's our credit. His balance is zero. Okay. So again, Elizabeth here got a $320 advance, and then she paid it back throughout the month. And you can see here, here's where we were able to identify Elizabeth overpaid $250. Okay, my QuickBooks file is showing me that. And then same thing here, we've got Trisha Thomas where she got $1,000. She paid back a portion, received another advance, and then she's been paying it back. So we can see where our balance comes from. Okay, so as I told you guys last week, what I want you to do is start reconciling this account, because Dan's paid his off. I don't need that. Elizabeth paid hers off. What I care about is this $250 for overpayment. I want to get rid of the noise. Okay, that reconciling process that I showed you last week would do that. So all I'm left with is what really makes up my ending balance of my $500. Okay, so same thing. So I'm going to focus to employee advances is pretty easy. It's pretty kind of in and out. But the two I want to kind of show you is your customer deposits and your deferred revenue. Okay, so if you guys aren't using this feature, high level, I'm going to show you customer deposits. We used to have to do it manually. Now there is a feature inside of QuickBooks to turn on what we call the prepayment feature. You can do this at estimate or sales order. It is activated under our preference section. Under payments and company, you have to activate it. Once you activate it, it then opens up this receive payment at sales order. And as I said, it's an estimate too. We've never had this before to where we can actually apply a customer deposit or what we call a prepayment to a non-posting financial transaction. Okay. So this would help us when it comes to allocating payments. We don't have to worry about it sitting as a negative value on our AR. Okay. Another benefit, really great report that they have created that I would recommend using as part of your month-end close is under our customers and receivables. It has a report that's actually called Open Prepayments by Customer. So again, using our accounting file and the reports that are already there to support our balance sheet value. So you can see here that it's showing us per customer the sales order and the prepayment that was attached to it. So we can see these 3 orders have not been converted to an invoice. The payment is still attached to that sales order. So this would support our balance and allow us to take away an Excel spreadsheet to say, what prepayments or customer deposits have we taken in, and we need to still perform a service or provide the goods for that order. Here's your report. Again, it's found under Reports, Customers and Receivables, and it's open prepayment by customer. Okay? So I want to show you the customization of this report that I would use. I would memorize this because this would be part of your month-end close. So coming up to Reports, coming down to Custom Reports, and we've got a transaction detail. So this feature here allows you to create a custom report on what you want to see. Okay? So you can see that my date range is my standard date range. I can remove, if I want to remove my from, put my month in. I can add columns. So this is what is displayed if there's something else I want to see. I can total it in a different manner. So I can say total by employee or total by customer, total by month. And then on our filters tab, right now, it's set up to show you all accounts. For this one, I'm focusing on showing you 2 accounts. I'm going to show you the customer deposit and I'm going to show you the deferred revenue, but the process and structure customization wise is the same for any report. So I'm going to choose, I'll just choose multiple because then I can type it in. Even though I'm choosing one, I can scroll down and choose it, but I'm just going to do the easy way so that I can type it in. We're going to do customer deposits. I can do 2 if I wanted to see both of them together, but I'm just going to make it easy for you guys. And so I'm saying show my just the activity, took out the from date, kept me my month end date, and this is my details. And then I can say, I'm going to show you, I can total by month. I don't really like that because you can see how much it is. It's just too much. Or I can say total it by customer. I like this because this shows me per customer the activity. Now you have to keep in mind that this is all activity for this GL account. So for example, right now for this TT other, I can see ins and outs, and I'm at 0. Okay. So right now I don't really need to see TT other. That's not an open customer deposit that I need to focus on. Okay. So again, going through and reconciling this account every month would remove that. And so I would say, show me only unclear. So I'm going to go and show you the TT other. I'm going to reconcile that just so that you guys can see that in case you weren't here last week. So we're going to come here and I can go into banking and I can go to reconcile. I'm going to choose that account. So that was my customer deposit account. I'm reconciling as of 12/31/2026. Ending balance for all non-statement account is always 0. Again, my goal is to remove my matching debits and credits. So I'm going to choose the TT, and I've got 12,000 here. I've got a matching 12,000 here. I have 25,000 here, and I have a matching 25,000 here. I review, I make sure my balance is 0, and I choose reconcile now. Close that. And now let's come back to the report, and you can see I've got this cleared checks beside, meaning I've cleared that off. So if I take a second customization and I come over here and I say on my cleared, I only want to see what's open. So something that hasn't been cleared. So I'm going to choose no. And now I got rid of what I was calling the noise. I got rid of a customer deposit that has been fulfilled. I don't care about that anymore. It's not what's important to me. Okay, so you can see here that this gives me everything that my Excel spreadsheet gave me: my customer, the date, and what it is they paid. Okay, or if I like this report, this could replace it, because this gives you the second layer of what sales order or estimate is that payment linked to. So this would give you what you need. Okay, so no more having to do it in Excel and do it in QuickBooks. Okay, so let's come back here now. Let's close this one out. Let's do our deferred revenue. So same thing. I'm going to take off the clear because I haven't reconciled that account. I'm going to come back to my account, and this time I'm going to choose my deferred revenue. So I'm going to remove my customer deposit, and I'm going to choose my deferred revenue. Okay, so again, when you think of deferred revenue, we're going to invoice up front for an amount, and it's going to be for a contract term. So think of a 12-month contract term. If I invoice up front, I did a monthly maintenance is what I did to show you guys an example. So the total contract was $32.32.50. It's a maintenance contract. It is a 12-month contract. And so every month, what I want to actually show for income is just what that is divided by 12. So it ends up being the $269.38. Okay. If I come back to my deferred revenue, you can see the exact same thing. I've got my customers. I've got that total contract. I've got the term. And then I've done some basic math to say, well, what would it be every month to get them to zero? Okay. So that's exactly what this QuickBook file is showing me. For Babux, we had that they paid for a contract of $32.32, and now we're allocating every month the deferred revenue. So what we recommend to clients is, when it comes to deferred revenue, is because you want to have your job cost reporting and WIP and all these kind of thing reporting, and they all use transactions. So we want to make sure that we actually do a customer invoice up front for the total contract. That way we see it on the P&L, but then we back out what is deferred revenue using a journal entry. Okay, so even though you can see that if I go and look at my profit and loss, I'll drill into this one that I did it for. I did it under maintenance plan so you guys could really see. I'm going to run it for the year so you can see what I did. So here's that initial invoice where we invoice them. And then here's where I started doing journal entries to back out my deferred revenue. And then here's my journal entries each month to see my activity just for that month. Okay. So this report here would show you per customer, what do they have outstanding in their contract per month. So that replaces it for you. Okay. So you can see by using this transaction detail function built into QuickBooks, I can customize any balance sheet account so that I can see the activity, and I no longer have to do the manual posting inside of Excel, to where this replaces it. So I can see that if I go back to my balance sheet, my balance will equal what I see on this detailed report. Okay. Okay, so that being said, kind of high-level review for you guys. We've talked about the importance and why behind closing out the books every month, what accounts we want to be reviewing, what accounts we want to be reconciling, and how we can use custom transaction detail reports to replace the manual Excel that we're doing, so being able to streamline that process. Okay, well, I'm always here for you guys. Would love to help be part of your team. Anything that we can help with, please reach out. We can answer questions. We can hop on a call, do some cleanup, some training, whatever you guys need. Just let us know. And thanks again for your time today. I really appreciate it.